Hi, I'm Anthony Parent, and I am one of the managing partners of Parent LLP. My dad and I started our partnership, about 15 years ago, and now we are a team of about 25 attorneys, CPAs, researchers, accountants, everybody on your side. So over the years, we've learned a tremendous amount of information and how to help people in a situation that you might be experiencing right now. Our goal has been to end our clients' tax nightmares forever. And so I think I can really share some great experience with you to sort of help you get yourself dislodged and start moving down the right path. So today's topics are, this is the big thing, this is a big issue that affects a lot of people, is trying to wait out the IRS or sort of just not delaying, not really getting to it. Look, I get it, who really wants to deal with an IRS problem? And the thing is, and this is the fact, it's actually easy to ignore the IRS, but there's some bad consequences to that I'll explain. So today I'm going to go over the delinquency timeline, sort of the range of time before bad things start happening. I'm going to talk about, what is the set amount of time or amount you owe before you have to start worrying about jail time, right? I'm also going to say why, one of the big reasons why people don't deal with the IRS is because they don't have the money to pay, right? Makes sense. Well, that could actually be a good thing, and I'll explain that. And then lastly, I'm going to talk about why when you ignore the issue, you're digging yourself deeper and deeper, and the IRS is sort of giving you the rope, longer rope to hang yourself with. That's going to be a common theme you're going to see today. So let's get started. Let's talk about that delinquency timeline. And I think one of the biggest misconceptions people have is they think that the IRS is like any other creditor they have. That if you don't pay your if you don't pay your credit card bill, you don't pay your auto bill for a few months, what's going to happen? You know what's going to happen. Somebody's going to call you. They're going to be all over on top of you. They're going to want their money. But it's not so with the IRS. You can go for a very long time. They'll just send you letters and notices before something bad happens. So I'm going to go over those specifics right now. I just need to take a moment to grab myself a pen, and I'll be right back. I am back. So let's start here. You owe money to the IRS. So what's the first thing that happens? You get a bill. You get a bill. They say, hey, please pay your bill. Won't you please pay your bill, taxpayer? Then you don't pay the bill. They send you another one. Hey, you notice you didn't pay your bill. Why don't you pay it again? You don't do that, they'll send you another one to say, you pay that bill. You don't do that, they're saying here, and now we're going to see a notice. Typically you'll see a CP 504 is the technical name for it. They have some other equivalents, but it's going to say something pretty scary. It's going to say notice of levy, right? And it looks scary as heck too. But here's the thing: this notice, the IRS actually can't do all that much. All they can do is intercept your state refunds. So time goes on, and you're thinking, now this is the point where you're thinking, wow, this is IRS, all they really do is send scary notices, but they don't do too much except take my refunds. Hey, I guess I could deal with that, right? It's not so bad. These people are blowing the IRS way out of proportion. Here's the deal, just lay back, lay low, and everything is going to go fine. Well, now you might wonder what will happen next. If the IRS didn't have scarce resources, what would happen next is they would send something called a final notice of intent to levy. Final notice of intent to levy. And actually I realized that this is they actually put the intent part right here on this CP 504, but you'll see this in bold, notice of levy. Final notice of intent to levy right here. Now this is a very important one here, because if you disagree with the IRS, you're allowed to go to appeals, and that's really where we get the best deals for our clients in IRS appeals. We deal with them all the time. If you don't respond to this one, what happens is the IRS is free to levy anything they know about, and they don't need to get a court order. They don't need to do anything. They just send out a notice of levy to, say, somebody, your employer, place where you bank, and if you're self-employed, anyone who sent you a 1099 will now get a notice of levy. Now you're wondering, wow, this is pretty much an automated process, and so you're trying to put things together because you might have been waiting a while. Like, but if what you're saying is true, why haven't they done that to me? Well, here's the reason. Remember I said the IRS has scarce resources. Once this notice right here the CP 504 is a very scary notice. What it does is it makes people, and I'll do my incredible artistic ability here, try to figure out what I'm doing. If you're a millennial, you might not know, of course you know, if you're younger than a millennial, you might not know what this thing would be. It's called a landline, right? We used to use these things all the time. What happens, most people are going to use their cell phone, what happens is these notices make the IRS, people call the IRS. Well, the IRS has half the people they used to have in 2008 manning the phones. So what happens is you end up with 2-hour hold times. 2-hour hold times if the IRS sent notices to everybody that had it. Now, this is the thing about a 2-hour hold time. It's actually not a 2-hour hold time. We're talking about the government, so if you're on hold with the IRS for 2 hours, they'll actually disconnect you. They call it a courtesy disconnect. And the IRS was getting a lot of heat for this. This was in 2016, early 2016. We had 2-hour hold times, and you never knew if you would go wait that entire time and you'd be hung up on. So the IRS got massive heat. So what they had to do is they had to governor their notices. They hold back notices because it's going to overwhelm their system. And the thing is, the IRS has time, and they know they don't have to get on top of this because they know, well, we could issue this CP 504, issue this final notice of intent to levy, and then boom, we could do everything we want. So they have that time, and that could act quickly so that you could have a situation where the IRS doesn't move for years, but when they move, I think the word is they slice like a hammer. That is what happens there. So that's what happens. Now, this is the other thing that's going to be happening during this time. We're talking years probably before the IRS gets there. Well, guess what happened? You know what happened. You have another tax bill, and probably 3 years went by. So you have, 3 years of tax bills sort of backing up. Now, if the IRS was like any other creditor, they would have said, hey, they would have been on you here a few months after that, and you would have sort of figured out the problem. You wouldn't have gotten to 2 and 3, and maybe even more. But because the IRS is sort of just taking a back seat, acting like, oh, nothing's going to happen, it's leading you, it's giving you that additional rope to hang yourself as the problems get bigger and bigger. Now, what I want to talk about next is, well, maybe you figured out something. You say, well, I owe money. You know what I'll do? I just won't file, right? That's one option, right? If you owe money in your tax returns, if you don't file, hey, you figured something out there. And maybe that's something you tried, and then you also found out the IRS does something else, is they do something called a substitute filed return. SFR, that's what we call it. So any W-2s that are against you at 1099, the IRS will prepare your return for you, and because they're doing it for you, they don't do you any favors. Your tax bill can be really inflated, and if you're running a business, they're not going to deduct your business expenses. So this is where we see people get really, really big tax bills that aren't exactly right, but the IRS is just trying to make it so, hey, they're trying to tell you, file your tax return, file your tax return. They don't really necessarily want to go out off of your SFR. So once that SFR is processed, or you file your own return, you just go back up here. So all you really did was delay the issue, and you probably added a few more years into the pot, and now the issue is a little bit bigger. So that is explaining the delinquency timeline. So the next question that happens a lot is people ask me, all right, am I going to go to jail? That's a question people ask. And I say, well, I don't know. I don't know everything you're doing. Maybe, I could give you an estimate on your tax exposure, but other things you do, and you might end up in jail, it's more likely. That's usually the situation. There is no minimum delinquency. There's no real target IRS criminal investigation has about when they decide to bring criminal charges to someone. The way I think about it is there's some things that are absolute dangers. If you have international income you're not reporting, okay, that's pretty big. You're in a different pool, that's a different risk. If you're famous, that's one of the biggest risk factors. Or if you are in a profession that, is more, they can kind of humiliate you a little bit. If you're a doctor, a lawyer, those are the types of professions they like to go after to say, hey, you see these doctors and lawyers, they thought they were so smart. They weren't. We found them. We put them in jail. And that's really what the IRS is trying to do with all of its criminal proceedings. They're trying to scare everybody into compliance because they can't get everybody. There's only about 3,000 indictments a year for tax crimes. Most of those people plead guilty, the vast majority of it, because mounting a defense is expensive. And so the IRS is really looking at you as how do you fit into a press release. Yes, there's a magical number. They always do want to get a press release that says, oh, $1 million owed. But when you look at it, it was really never $1 million. They're adding up so many things, and they're inflating things, and the person's just rolling over and pleading guilty to things that they probably don't owe. So if you're so if you're substantially underreporting, that is where you go. If you don't file, it is very rare for the IRS to put someone in prison for not filing. I always can think of one exception where it happens, and it's rare for the IRS to put someone in prison who's a W-2 employee who underwithholds, but I've run into that too. So the IRS acts a little erratically, and I think that might be on purpose to sort of say, hey, look, anybody could be at risk for criminal prosecutions. There are just some significant things that will enhance your risk. Also, one of the other things that will is if you do have charges of if you do have previous convictions, especially financial crimes, that regardless of the truth of whatever they were, that's going to be something that makes you an easier target. That's what they're looking for. Trust me, the government doesn't want a trial. What they want you to do is scare you into taking a deal that stinks. And and then the part about the criminal charges that I can't stand is that the judges always impose this order of restitution of whatever the amount is. And that's parallel with whatever you have here. So now there's two collection things that you owe. Now the thing is the IRS civil part's going to be on you. They've been on you. But with the order of restitution, that really resides in the court. And the court doesn't have the mechanism by which to go after someone. So it's just this order that they're not even bothering collecting. And the number's so high, no one's ever going to pay for it. So it just gives you a black mark for the rest of your life that it's something that you're just, having to live with a $1 million, $2 million debt, which when you never even came close to actually owing that, it's really a bummer. And I've talked to a lot of people, and there's not too much you can do to undo that. So that's why, it's a good idea maybe not even to go down that road. Let someone else do that. That's what I say. Now, the other thing, too, is I don't have the money to pay, right? Hey, Anthony, I didn't have any money to pay the IRS. That's why I did it. I would have paid them if I could have. That's why I did it. Well, this is the thing to think about. And I would say this is the best way to think about it. The income tax is based on how much you make in a given year. Well, what other bills do you know of that can be based on what you make in a year? It's just really income tax, right? So if it's a percentage of what you make in a year, this number can get big really quick. There's really no other bills where a middle-class person could end up with a bill of $80,000 in a few years. And that's completely reasonable. And someone a little bit on the higher end might owe $500,000. So the government knows that things can get way out of control. And they know that if a tax debt is not paid in full within 2 years, the chances of them getting full payment on that become really low. There's a reason why every creditor in the world, and if you're running a business, you probably have even some things you've written off as bad debt. Why? Because it's not worth the time to collect. You're never going to get anything. You just want it off your books. So the IRS thinks of it the same way. So if you don't have money to pay, well, now you're in a very strong bargaining position. So that's the best thing to do, is to say, this is the time. This is the time to settle. I have, I've been doing this a while. As I said, I really don't like it when I have someone come into my office to say, hey, I've been following you for years. I'm finally coming in because I have all the money. Things have finally improved, and I want to get this behind me. And I'm thinking, why didn't you come to me last year? You would have gotten such a better deal. Now my hands are tied. There's not too much that we could do here. So that's where I would say, I hope there's two things that I want you to take away from this. Number one, time is not on your side. Get on top of it. The quicker you act, the more options we have. And the second thing, too, don't let money be your excuse into not getting this done. If you don't have the money, that is sort of the best news. So with that, I want to thank you for joining me today. And for our next training session, it's going to be negotiating with the IRS, what you need to know before you respond to them, whether by phone or contact them. So click the button below this video if you want right now to schedule a consultation with one of our tax experts. I want to thank you for joining me today. I know having an IRS issue can be scary or overwhelming. I'm glad you're taking the steps necessary to get this problem behind you.